Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, has turned positive after recently rebounding from the support level of 91.70 or recording a low of 91.60. The market has now traded firmer overnight and clears the level of 92.65, which should be supportive for fresh gains and providing the next leg up to a potential goal of 93.30.40 and reassess from there. With additional positive news overnight, the US ADP non-farm payrolls jumped to 237k, marking a 3-month high, squashing the forecast of 185k with the previous number of 2001k. Alongside this, the US GDP quarter also came in better at 3%, forecast was 2.7, previous was 2.6. The official non-farm payrolls report is to be released this Friday, and if the number is higher than forecasted, then it would be viewed as a stronger signal that the economy in the US has improved in the third quarter. Moving on to the euro dollar, since the rebound from the short uptrend 5 days ago, as you can see here, very strong candle, the euro dollar briefly pushed to a high of 120.69, last recorded back in January 2015. However, what is concerning is the fact that the market has posted a potential shooting star, as you can see here. The shooting star is a single bearish candlestick pattern that is commonly seen in many markets. The shooting star is similar to the evening star. It is a bearish top reversal pattern that may appear in an uptrend and warns of a possible trend reversal. It actually bears a resemblance to the inverted hammer, although a shooting star would only occur at the top of an uptrend where you would see an inverted hammer at the end of a downtrend. The candlestick must occur after an uptrend, and as you can see here, we've been in an uptrend since the end of June. The candlestick must have a short body followed by a lower shadow, the upper shadow which conveys the extent of the price movement, and it must be longer or at least twice the length of the real body, which you can see the market clearly fell back to that downside to post a shooting star. The long upper shadow gives the name because when combined with the small body and the location after an uptrend, it reveals the shooting star. So this signal to the euro dollar may have turned a corner as the US dollar strength is now slowly recovering and clawing its way out of the bearish trenches. Traders are now looking for further support for the US dollar. Therefore, the release of the Friday's non-farm payroll, average earnings, and also the unemployment number could be a sign for the US dollar to recover further. The non-farm pay number at the moment is forecast holds at 180k, previously was at 209. The unemployment number forecast is expected to hold at 4.3%. with the average hourly earnings forecast at 0.2%, previously at 0.3%. Yesterday, the Australian dollar data release wasn't strong enough to convince the bulls to continue on to the upside. The Australian Bureau of Statistics, or the ABS, reported that building approvals declined by only 1.7% in July, compared by expectations for a 5% drop. Building approvals were revised to 11.7 climb in June, up from a previous estimated 10.9 increase. A separate report showed that construction work done in Australia increased by 9.3 in the second quarter, beating expectations for a 1% gain. So overnight, the noise of the bearish price action heightened as the dynamics of a potential bear market may be emerging, with the depreciation in the Australian dollar now increases by the posted outside range day. This is a negative signal, and if we get further follow-on, so we do need to see a slightly more, or should I say, support of a further flow to the downside, and a break under 78.90 would give this confirmation and seal the fate for the Australian dollar to trade or target towards 78.30, with the technical implications also coming through, is supportive for this move down. Any advances towards the upside sees a cap around 79.45. Later today at 11:30 we do have the private capital expenditure. Previous month was at 0.3%, the forecast today is at 0.2%. Well, as the US dollar now attempts to climb further towards the top side, the overnight price action improved for dollar yen, with further scope seen towards the top side of now coming in at 110.70. With the market sentiment improving, does look towards this level and may extend towards 111.50.55 and reassess from there. Any pullback on the day views the support holding around 109.60.65, with the firm base holding at 108.30. The British pound attempts to extend its European consolidation into the early hours of this morning in New York, but the bulls only managed to clip a high of 129.37 before its retreat. Overnight, the EU chief executive Jean-Claude Juncker blasted Britain's failure to answer huge numbers of questions on the Brexit and plans as negotiators held a new round of talks on Tuesday for the divorce, which is now less than 2 years away for the Brexit. I still expect to see further weakness coming into the pound, even though the technicals are slightly firmer. I do anticipate a rejection from 129.80.85 and look back towards 128.60. Now a break beneath there would give further scope to 127.70 or even down to the base that I'm now holding at 127.05.15. Overnight, the bullish enthusiasm for gold was not as apparent as recently seen this week, with the likelihood that traders or investors are locking in profits since the precious metal rallied to a 10-month peak at 1,326, which was mainly triggered by the geopolitical tension between US and North Korea. Although the market still sees gold as a safe haven demand, the tension is slightly less overnight after President Trump's reaction to the North Korean aggression was seen more moderate than previously. However, the president did warn that all options are on the table. Looking at the pattern here, if we do see a break of the trend of 1,295 to 96, this would give further scope to the downside and open the way towards 1,286 to 88 as a target. My preference is the fact that the market is breaking down slightly, as you can see here from the technicals. So therefore, I do expect to see today pressure on the support, which comes in now at 13.05 as minor. And then, as I mentioned before, the uptrend of 1,295 to 96. Any advances now sees resistance between 1,314, should I say, to 1,318. The silver outlook also at this stage is buckling, and I do expect to see the market to retreat from 1760 to 70, and look towards the support at 17.15.20 and reassess from there. With the technical implications also, like gold, are swaying more of a bearish sentiment, so I do expect to see little upside attempts today. And to wrap up with oil, the market is getting closer to its target of $45.70.75. Now at this stage, I am seeing weakness to continue. However, traders are currently assessing the economic impact of the tropical storm Harvey, which has resulted in catastrophic flooding in Texas and has knocked out nearly or almost a quarter of the US crude oil refining capacity. If the supply does get short, then of course the market should start finding demand in price, as the assumption that the market could either rebound from 44.80 or around this 45.70. So if those trading short, just be on your guard, as we could see an impulse back towards 46.80 to 47.60.65. So that wraps up my daily video. Thank you very much for joining me today, and I hope you have a wonderful day that's ahead of us.